Hi, this is Cheryl-Lynn Freeman, CEO of Mzansi Business Services. Welcome to our online learning platform on Mzansi Empowerment. And we are here to just share some knowledge regarding various aspects of business, compliance, as well as tax, to be able to ensure that you are minimizing costs in your business and not getting penalties, nor getting your company deregistered. The second aspect of business compliance that we are going to look at is what we all love. It's the T word, taxes. We don't like paying them, but we know the services have to be delivered in the country for our poorest of the poor, and we are a contributor to the GDP of the country. So we have to, I like the tagline by SARS. I am not a believer of whether it's always true that they use all the money to change lives for good, but I am hoping that is where my taxes are specifically going. So we're going to be looking at various aspects of that, just touching. It's a very basic compliance course, just to look at what are the requirements for your PTY, and the same principles will apply, remember, for existing closed corporations. So the one myth that I would like to kill that a lot of companies have is that if I started out my business, I'm not making any money, I don't need to submit any taxes. First of all, how is SARS going to know that you're not making any money in your business? You need to be able to disclose that to them in some way. If you may be still preparing, depending on the nature of your business, for future business, then you need to be able to know what exactly is required to maintain your status with SARS. So one of the things that a lot of people have a myth about is that if I'm not making money, I don't need to submit taxes. If you have a dormant company and you want to still have the company running until you get to the point of starting it up or starting to trade, then you need to submit what we call a nil return, and you need to indicate to SARS that this company is dormant, and then you need to select of the pre-selected options what is the reason that your company is dormant, and you submitted the nil return. The second myth is when a lot of companies saying, but I didn't make a profit this year, I made a loss this year. What happens with those losses, it gets carried forward, so you need to disclose that to SARS, and you need to disclose your numbers. Don't assume because you've made a loss in that year that you don't need to disclose your financial records as is. You still need to do that. You still need to disclose the income that you have. You still need to disclose your expenses. Don't dismiss it and put in just a no return because you've made losses for that year. So essentially, from an income tax point of view, if you recently registered your company, you would be able to have an automatic SARS number. So at the time that you register your company and you get confirmation, CIPC and SARS are now, you can say, married, because the one always communicates with the other, and we know that's one of the most important aspects of relationship to last. And I think that's going to be a long-lasting relationship between CIPC and SARS. So once you registered your company, you are issued with an income tax number, and then immediately that obligation to deal with your SARS matters kicks in. You as the director becomes automatically the tax representative for your company. And what does that mean? It means that you become responsible for the tax affairs of the company. No, it does not go onto your accountant. It does not go onto your tax practitioner lap. It's not their responsibility. They are there to help you, to provide you with the best advice that they can, so that you are able to then ensure that what you're submitting is accurate and that aligns to the Income Tax Act as well as the VAT Act if you've got sales tax in your business. So you have your provisional tax returns that you have to submit. So that is an estimate of 6 months of the financial performance of your company. Remember, it's just an estimate. So it's also a means for SARS to be able to collect taxes before they actually become due. And this happens twice a year. It happens just after February, and it happens just after August that you have to submit your provisional tax return. If you've got a SARS e-filing account, you'll be able to see on there it's something called your tax compliance status. Then you'll see a 6-digit period. If it's a 6-digit period that you see with the extra 2 digits, then that is a provisional tax return that you have to submit. So it will say, for example, 2020-02. That means that it's your second provisional tax return that you have, and it's for the period leading up to February 2020. And that happens twice a year. Then after that, you will submit your actual annual return. So that will be your ITR 14, your annual return for the specific year. Whether it's a profit that you're making, whether it's a loss that you're making, you need to be able to submit it. One of the things that I've identified with small business owners that they have missed is what we call the small business corporation rates. For the small business corporation rates, you get lower rates. So you need to ask your accountant, you need to chat to your tax practitioner about if you qualify, there is certain criteria to it. You'll be able to benefit for the first 70,000 Rand profit that you make in your business. You are not taxed on that. And then they work according to a scale. So for example, if you earn between 70,000 and 125,000, and you'll pay 7%. And then a step after that, after 125,000, you pay up to 250,000. Then you move into a higher bracket. So essentially your tax becomes higher. It works the same principle as your individual tax. It becomes higher and higher as you go along. If you do not qualify as a small business corporation, then you will have your standard, and you need to check. Usually they toss it between the 28% rate and the 29% rate. Currently, your company your company tax rate is the 28% that you need to use, and it's taxable income. It's profit that we know it as. So it's not tax on your income for the year. It's tax after you take your income that's allowable by SARS to be disclosed, or that's taxable. Then you take your expenses that is allowable to be deducted by SARS, and that bottom figure that you get, that is the figure then that will determine whether you are paying monies over to SARS, if it's a profit, if it's a taxable income amount that you have, or if it is a loss that you will still do the return for and disclose to SARS.